everyone. So for today's video, I'm going to share with you just a high level to somehow differentiate the S Corp, C Corp, partnership, and corporation. Because there is some sort of a notion that when they hear the word corp, it's equivalent or it's tantamount to corporation, but that's not the case when it comes to US taxation. So that just let me walk you through with the I may say this tabular presentation that I did in terms of business structure and how it flows until the tax form that needs to be issued or used. So let's start off with corporation. In this tabular presentation, we have here corporation, partnership, and LLC. So I'll be giving you some distinction between each of the business structure. So for corporation, by nature, this is a separate entity from the stockholders. The stockholders can be in the form of a person, it could be a partner also, or another company for that matter. So for it to be recognized by the Secretary of State, the articles of incorporation has to be filed. So in terms of classification or for federal tax purposes, by default, this is a C Corp. However, there are instances that this can be an S Corp only if it's eligible, alright? So in terms of tax form, if it's a C Corp, you file for a C Corp and you had elected it via 8832, then you need to file Form 1120 to be submitted on April 15. So the corporation itself is liable to pay its own tax. And in terms of distributing the dividends of this corporation, it's also taxable on the part of the stockholders. That's why it says here that corporation is prone to double taxation. You already tax the earnings of the corporation, and once it's even distributed to the stockholders, then there's another tax to be paid by the stockholders. So aside from that, one of the features of corporation is that it can have two classes of stock. One is common stock, of course, as the word says, it's common, and another is preferred. When we say preferred, and a stockholder is a preferred stockholder, for preferred stockholders, they have preference in terms of dividend distribution. So once there's a declaration of dividends, all preferred stockholders needs to be paid first, and whatever is left, that has to be allocated to the common stockholders. All right. So that's for corporation. Now, the second business structure is the partnerships. For partnership, we have the general partner, we have the limited partner, and also we have the qualified joint venture. So, as the word suggests, for general partners, then they are liable to all their creditors. For limited partnership, it does not mean that all of the partners are limited. There must be at least one general partner in the limited partnership because that general partner is liable to the creditors. So, as the word suggests, for partners, it has to be two or more individuals. Um, in terms of tax form to be filed, it's 1065. This is an information return because the partners will not going to file to pay taxes, but it will be the partners who are part of the partnership, and it will be through their K1, which also needs to be issued by the partnership to be used by the partner, by the individual partner, in completing their tax form 1040. All right. For partnership, of course, they can also elect it whether they would like to be an S Corp or a C Corp instead of a partnership. So in terms of election, if it's an S Corp, they have to fill out 2553. For a C Corp, they have to fill out 1120. All right? So that's for partnership. Another type of partnership is the qualified joint venture. So for qualified joint venture, mostly these are the married couple who thinks of putting up this business, and they were classified as qualified joint venture. So the thought process here is that they should have they co-own the business, they have equal work running the business, and of course they are married. Okay, so for qualified joint venture, by default this is a partnership, but they can elect if they don't want it to be considered in the for federal tax purposes, if they wouldn't like it to be classified as a partnership, they can still elect it to be either they can elect this as or treated it to be part of their 1040. So they have to create Schedule C. So this is another option for qualified joint venture. All right. So last but not the least, we have the LLC, the limited liability companies. For LLC, we can classify it into three. We have the single proprietor, the single member LLC, and the multi-member LLC. All right. For single proprietor, LLCs are, so this is the business structure of the LLC. So in terms of when you put up an LLC, the articles of organization needs to be filed to the Secretary of State. So if you're a single business owner, it will automatically be regarded as disregarded entity, and as a disregarded entity, you have to file Schedule C, or you have to complete Schedule C to be attached to your tax form 1040. So as the word suggests, for single proprietor, only one person. This is only composed of one person, and there's no business file, there is no business return to file. So the only thing that you have to file is the tax form 1040, which is an individual tax form, and you have to attach your Schedule C. All right. There's another LLC, which is a single member LLC. Okay. In terms of the document to file to the state, it's the article of incorporation, article of organization rather. So for federal tax purposes, if you wouldn't like to be considered as a disregarded entity, then you can elect, even if you are only alone, then a single member, one sole person running the business, and you wouldn't like to be regarded as a disregarded entity, then you can elect either an S Corp or C Corp. So in electing either of these two types of tax classification, please do not forget that if you opt to choose as an S Corp, then you have to file 2553. Or if you would like to consider your LLC as a C Corp, then you have to file Form 8832. Please consider that, or rather, please note that an S Corp and a partnership file 1065, these are informational returns. Rather, tax form 1120S and tax form 1065 are passed through these are passed through or tax forms which are merely informational returns. All right, these are informational returns. So also for S Corp, there are certain limitations. There are any members of an S Corp, they should be all US citizens. They should only have one class of stock, and um, it should be into this column. And the number of members should not exceed 100 owners. So there are single member LLC. They have to be they have to consider this limitation. So just to remind you, an S Corp is not a corporation. An S Corp can be an LLC. It can be also a corporation, but of course, as S Corp, they do not, when we say S Corp, whenever they have income, the S Corp will not file for or pay for that, pay for the corresponding tax to that S Corp, but then the tax has to be passed through the owners. Okay, there are K1s that need to be prepared. Okay, so if an LLC or a partnership or a corporation, they elected to be an S Corp, then they have to fill out form 2553. All right, last but not the least is the multi-member LLC. Just the same for LLC, they have to file articles of organization. For a multi-member LLC, if it's even more than 100, it can only a C Corp to be choose. But if it's less than 100, so still a multi-member, then an S Corp tax classification can be chosen. So just to repeat, for S Corp, they have to complete of fill out 1120S, but if it's an C Corp, they have to fill 1120. If you opted for a C Corp 1120, then you have to file the corresponding tax for for this LLC if they opted for a C Corp. All right. So just remember the S Corp is a pass-through entity. All right. So this is how I differentiate S Corp, C Corp, and partnership and corporation. All right. So thank you for listening to this very short video. All right. Bye bye.